Hey everybody, this is Ryan with TrendLizard.com. I hope you're having a wonderful weekend, and I hope this weekend treated you better than the stock market's been treating everybody lately. Last week, instead of doing a hot stock update, we dove into the current state of the market, what had been going on lately, showing you a list of the hot stocks and what their charts look like, and to show you why this just is a terrible time to be owning stocks right now, just on a short and midterm basis. I want to clarify that we're still bullish on the long-term time frame, but on the mid and short-term time frame, there's just not a lot that's going up. Everything seems to be getting smoked, and I've got some stats tonight to prove it to you, and some of them are a little bit mind-blowing. So I'm going to share a few of these with you. Over the last 3 months, I went stock by stock through the NASDAQ 100. 83% of those stocks have lost money over the last 3 months. On the S&P 500 over the last 3 months, 79% of the entire 500 stock database is down. The NASDAQ over that amount of time has lost 15%. The S&P 500 has lost 12%. But it's not just those big guys also. I looked at every one of the major 40 market segments. We're talking global markets, we're talking commodities, currencies, U.S. markets, U.S. market sectors. Over the past 6 months, only 7 of the 40 market segments were up. So that means 85% of them were down. So the ones that were up, natural gas has been going on quite the run lately. It was up 28% over the last 6 months. Brazil was up 19%. Gold and silver were both up 4%, and real estate was up about 3%. Not super impressive moves, but those were the ones that beat the entire market, while every other corner of the market, whatever you're talking about, has been down. So another thing I did is I went through our list of hot stocks. I follow about 27 hot stocks regularly. Over the past 6 months, only 6 of those were up. That means 78% of the hot stocks. These are the stocks that are making the most news, making the headlines, the ones that are most searched on the internet. 21 out of 27 were down, or 78%. The average loss on those hot stocks was 14%. We're talking 6 months, a 14% loss on average of the majority of the hot stocks, the most popular stocks that are out there. So if you're not getting crushed right now, you are winning. And you might be out there on YouTube right now searching, trying to find where the hot stocks, where can I put my money? Pump your brakes. Don't put your money anywhere right now. You need to wait for this pullback to end. This is a scary point for the market. I don't think the long-term advance is over, but this is a point where you need to be capital preservation mode. Not to pour on or repeat what I did last week, but that's kind of where it's at right now. You just can't be aggressive, and if you are, you're making donations. Maybe it's your end of year charitable contribution to the market if you're feeling like you're in that giving spirit. Otherwise, this is a market that's just terrifying. And at some point, yes, there's going to be a low. There's going to be a ton of buying opportunities, but don't try to find it before you see something on the chart that says, hey, a low is in, this thing is reversing. Until that happens, you need to be very cautious. Again, capital preservation. That said, there is one ETF that I identified last week, one market segment that we discussed, and that is Brazil. EWZ is the ticker that we trade. We trade it, or we monitor it every day at TrendLizard.com. So I want to take a quick tour of it today and show you why it's one of probably maybe the most interesting ticker, whether we're talking stock, ETF, market index, whatever, that's out there right now. Again, I told you over the last 6 months, it was up about 19%, so that has just absolutely crushed the competition. And I want to show you why it's an interesting ETF and why it should be the one that you're following closely here. Obviously, I don't want to get aggressive with anything, but if anything, once the market resumes and starts heading higher again, EWZ or Brazil will be at the top of our list for something that we want to buy. So I'm going to take you through those charts real quick. Sorry for the diatribe, but let's get to work and look at EWZ. Here we go. All right, guys, so here's a look at EWZ, the most popular ETF for Brazil since its inception back in 2000. And I think we've looked at this in the past, but I wanted to update it again just because it is one of the best looking charts out there right now. You can see off the 2002 low into the 2008 high, it traced out a beautiful 5-wave advance, super clear. From there, off the 2008 high into the eventual 2016 low, it traced out a beautiful 3-wave pullback. Since then, it's reversed off of about 16 up to nearly 40, about 47 or so, and it appears to be resuming its overall uptrend here. So that's some bullish stuff on a long-term time frame. So on a very long-term time frame, EWZ looks absolutely beautiful, but it gets better as we drill in. So let's go ahead and zoom in on this advance up to 2016 low. This is it. This is a nice 5-wave advance. Again, this is trendy stuff. As you know, trends play out in 5-wave moves. This looks like the resumption of the uptrend again after the 3-wave pullback that played out over several years. So again, that's a really nice base with what we're working with here. So after it completed this nice 5-wave advance in early 2018, it's been in a large pullback. It retraced a Fibonacci portion of this advance here, so it retraced about 50%. Basically, this yellow support area here goes from about 38.2% at the top of the yellow area down to about a 61.8% retracement here. So we're looking for that retracement. It has found support there. It has come bouncing firmly out of that area and looking good from there. So there's not just one way that we can look at what's going on here. There's actually two ways, one that's not directly bullish, one that is. The possibility that the pullback is not yet over does exist. So if EWZ turns back down, we know that it's not the time to buy right now, and I'll show you how we'll determine if that's the case. The other opportunity is that the pullback did complete in at this low here, I think in September or October, and has kicked off a resumption of the uptrend since then. So let's drill in, take a closer look at what's going on here just to show you how we're going to determine if this 2018 pullback is over and ready to buy, or if we need to expect a larger pullback before this becomes a buying opportunity. So let's go ahead and zoom in yet again. This is the advance off of September's low. This is what has us excited here. It's a very clean, again, 5-wave advance. So as you can tell, every strong up leg that EWZ or Brazil has been in here on every time frame really has been trendy to the upside. Now there's this pullback that's taking place off of November's high. Obviously the market as a whole has been getting smoked over that period of time. So the question is this going to just prove to be a counter trend move, find support again in the yellow support area, and kick off another up leg? If so, we want to own it. And if it's unable to do that, well, then we will know that it's still in the large 2018 pullback. So here's what we're looking at here. If EWZ can find a low to this pullback that began in November at some level above 35, then it instantly becomes a great buying opportunity. You can see this advance off of September's low into November's high, added about 33% of its to the value of this ETF. So if we get even one more up leg, you're talking about a substantial move, something that would absolutely be worth buying. So the key is 35. Can EWZ stay above 35? If it's able to do so and move back towards November's high, well, then this becomes a great buying opportunity. It's something that we want to get involved in, especially in this market when there's nothing else that's really going up. EWZ could buck that trend and give us again, a resumption of the overall advance and look like it's poised for significantly higher levels. So you want to be watching 35 on EWZ. If it can stay above that level from here and move back towards November's high, then it's going to look like a great buying opportunity. So that's what we're looking at. Again, it's such a rough market right now. It's very fortunate if you're finding that small percentage of stocks or ETFs or market indexes or whatever else that's going up. EWZ has an opportunity to buck that trend and give us substantial strength ahead as long as it stays above 35. So I hope that's helpful to you folks. This is Ryan from TrendLizard.com. Have a great evening, have a great week, and we will talk to you again soon. Thanks.